Yeah, hi guys, Stephen Afford from Afford Fortune, creating fortunes for the future. Today is Monday, the 22nd of May, 2017. I hope you had a great weekend over here in WA. It's pretty wet. WA is Western Australia, of course. In Perth, it's been raining for nearly a week and it's going to continue there probably Wednesday. So here. Anyway, this particular video is about how to trim some of your negative trades without losing too much volume of your trades at that particular time. Because if you say, for example, there's $25,000 in the minus here. Now, the only reason I leave these up, as I said, I use it mainly for indicators. But if you want to trim some of it, instead of trimming $25,000 off your value of your equity, you can just trim a little bit of it. So let me go through and show you how you can take, say you want to drop off 5,000 off the 25, for example. Let's go through it, go through close. And as you can see, the amount here is 5 million. Now we can take that down to say 4 million and see if, how much we can trim off the 25,000. And basically just change the number, this number here, or even less number, what we're talking about. We take the highest position, the one that's losing a lot more money. That's what I'm saying, which is 11,000. So let's trim down one and say we want to take, we want to close just a small amount. Say 100,000 instead of a big amount. Because remember we had $1 million in there. Now double check that number. Oh, sorry. Oh yeah, that's it. That's it. I think it's showing up there. We're going to trim off 1,100 off that 11,000 trade, and that is literally how much you can trim. And I think this is what that video is all about. It's just teaching you how you can trim some of your negative trades without taking too much of it off. Because you and I know the market can easily change, as we are starting to witness right here before us, how much this asset is going now within the range of these negative trades. So what I'm saying here is, if you trim it too early, you're going to miss your trades coming back onto the money again. And working with the charts is important also to make sure you're not going to trim a trade that is going in your favor at that moment of time. But I just wanted to show you this video how this can be done. Now this is done also with Plus 500, which is a CFD account. And if you want to join one of these Plus 500 trading accounts, there should be a link down the bottom to join them. And of course, any other platform that I recommend, join them. But don't trade straight away for your own money. If you're a professional, it doesn't matter. But if you're a newbie, get straight onto the demo account and start applying the demo account before you can even think of trading real money. But if you need a hand, if you need some sort of expertise, help, you only got to come back to me. I should have a contact detail below this video, and of course subscribe to my video so you can get more of these handy hints how to trade successfully online. And as I said, although these trades might not look healthy, it's only because this morning I opened up some trade and closed some off. And of course this Euro USD could be on a decline, on a reversal. We'll know that, but later on today. As I said earlier in some of my video, you'll notice a lot of my trades are out of the money sort of action. I only leave them up here because, as I said, I know how to trim them little by little instead of, taking your losses straight away, and all of a sudden the market changes, and it helps remove some of the negative value of your trades. So it is important, to manage it. And don't panic because, as you and I know, the market does change. Yes, we look into our charting system. Investing.com, it is highly recommended if you are going to be a trader, to make sure you have a pretty good charting system or signal provider. I suggest Investing.com. Sign in to them. It's a free service and it's absolutely awesome to use. Euro USD, and as we see, as I was trimming, where was that? Some of my sell position with Euro USD. Hold on, there we go. Euro USD. I hadn't really checked, but I just needed to show you. I should have checked it first. But anyway, this gives you a classic indication. Don't trim trades too early, but double check with your signal provider or charting to see what the asset is moving. You don't want to be trimming a trade and yet the market is doing that in your favor. But I needed just to show you the video anyway regarding trimming some of the negative trades that you might have open without losing too much value on each one. One sec, I needed to show you something else. Here's another account that I have that's just as important and has exactly slightly different sort of measuring or gauging it, but basically they're all the same to me. I just find trading with currency pairs, they all have the same sort of basic elements, and as long as you can gauge what the asset is moving that you're going to trade with, and I think that's more invaluable than anything else. As long as you think that Euro USD is going to keep going down and you make your trades accordingly, then of course that's going to be beneficial to you. For example, this particular one is Euro USD again. I'd say this is going to be declining for the rest of the day and maybe early tomorrow before it goes back up again. I think it's going to come down to 1.115. Sorry, reread that again. I think it's going to come down to 1.1115 before it goes back up again. Again, that's only a prediction. And if it does do a reversal, this particular asset is going to keep going downwards for a few days, or could be months. But more likely, it is going to be keep going upwards. It's going to keep trending upwards. Hold on, let me give you some explanation on that fact. I'm taking the time frame a bit deeper. As you can see, we're going all the way back to 2008 or 2010, and it has bottomed out. It could continue coming down, in the corner. I mean, not in the corners, but in reference to its history. 2002, I think. One of the lowest, and it might keep coming down again. Some of the predictions can be quite out of the equation, but I think it could be. I mean, I could be totally wrong saying that this asset could be still going up, but according to the long-term forecast, it looks like it's more likely to keep going down to the same level around about 2002, which is quite some years back. Now, we can look at that and say, yep, that's going down, or we can take a short-term look at it, say an hour ago. That will give us some sort of gauge. Remember, this is only for Euro USD, or anything that's got a euro in the beginning of it might have exactly a similar sort of outcome or outline. But in the short term, this particular asset, it could be still going upwards. It's still on the upward trend, which started. There we go, around about the 11th of this month, and it has been trending upward quite relatively, and hasn't missed a beat that much. But if you follow the market and don't try and beat the market, just follow it. That's the saying is, the trend is your friend, and this is actually trending upwards quite well. And if you took some trades around about, as we spotted here a moment ago, around about the 12, you'd be a very, very happy trader, of course. But anyway, this video was basically to show you how to trim some of your live trades that if it's out of the money, like my one here, you can trim it little by little instead of taking, say, trimming $11,000 off your equity. You can just trim, say, $500, and if you do it little by little, your equity or your balance will still stay, pretty healthy, giving you enough margin to trade with. And it's these available margins that you can use to trade successfully and make some profit. And it's the profits that you make from, as I said, from these available margin that can grow your balance. And I think that's the key element to this fact. And once again, if you'll have a look at this other one here, it's very similar. I have been trying to trim some of these back little by little, and without taking out too much of their balance. You want to keep an eye also on your margin, or your margin level, or your free margin. These are the things that dictate your account will continue trading. If these are out of sequence, if this becomes zero, you are in dire strait, because your account could easily be wiped out by the market. So these are some of the things to watch for. But otherwise, the market is vibrant. It's making money. And I do suggest, after you've done your practice rounds, with using some of the strategies I have shown you, you can trade successfully on the stock market. The size of your trade has to be as small as you can, because otherwise these numbers are higher. It's taking out too much out of your equity and trading it, and you're putting your capital at too high risk, as opposed to smaller trades. Smaller trades are much safer in the long term, because you're just trading it, allowing it to grow. But of course, if you know exactly where the market is going, then your size or your volume of a trade could be a bit higher to take advantage of that fact. But anyway, this is Stephen R. Ford from R. Ford Fortune, creating fortunes for the future. And if you don't see me or hear from me in the next month or so or year, that's because I'm gone away for ministry. If that's the fact, you're not going to hear from me. But anyway, trade well, stay away from scams. God love you, we love you, and hopefully you see you on my next video. Bye for now.